Hello and welcome to another video on my YouTube channel. My name is Joris and today I will be ranking 20 Belgian stocks from the BEL20 Index. And as you know, I'm from Belgium. I'm living in Switzerland right now, but yeah, I started investing on the Belgian stock market 28 years ago. So when I was 14, 15 years old, I started investing there. And BEL, it is just the short for Belgium. And it's the BEL20 index. It's the benchmark for the Belgian market, and it contains the 20 most significant stocks on the Euronext Brussels market. And the Euronext Brussels market, it's a small stock market, so you can expect there companies with a lower market capitalization. But there are some that have a bit of a bigger market capitalization, and whether or not they are interested to invest your money towards, I will go over today. So first off, when you look at the ranking according to the market capitalization in billion euros per company, you see that after the fifth company, D'Ieteren Group, you have Lotus Bakeries, and their market capitalization is already below 10 billion euros. So it goes incredibly fast. And then the biggest one, AB InBev, so Anheuser-Busch, the brewer, it has a market capitalization of 111.5 billion euros, and that's almost 4 times as much as the next one in the row. So there we have UCB. It's a pharma player, and yeah, that one has a market capitalization of 30.4 billion euros. And then I must say about the brewer AB InBev, if you look at the PE value, it's 21.67. Well, that's way better valuated than Heineken in the Netherlands. So if you are looking for a brewer with great beers where you can invest your money towards, then I think AB InBev is definitely a contender. Certainly when it can drop again to 51, 52, like what happened with when they brought out a commercial that was a bit controversial. So then it dropped to 51, and then the PE ratio, of course, went down more to 19, the low 19s, and then it's definitely more interesting to invest your money in AB InBev. Then we have the first one with a negative earnings per share, and that's Argenix. It's a biotech company, so also actually a pharma player, and their market capitalization is a little bit less than 30 billion. I really don't understand how it's more or less the same market capitalization as UCB, because UCB, it's a really great pharma company. They already are consistent for over 30 years. So yeah, it wasn't my first stock where I invested in, because when I was young, so 14, 15 years old, it was still noted in Belgian francs, and it was around, yeah, it was, you had UCB-A and UCB-B stocks, and they were more than 100,000 Belgian francs. And back in the day, I didn't have that amount of money, so I couldn't invest in it even if I wanted to. So, and Arganex, yeah, they are not making a profit, and still they have such a high market capitalization. So I think it's overvalued for sure, and that was also seen on the 20th December of 2023 when they announced their results. They weren't liked by the investors at all, and they just sent, in a matter of hours, Argenix 33% down. So they lost 1/3 of their market capitalization in 1 or 2 hours. It was incredible how it was possible, in fact. Then on the Euronext Brussels, the stock could fall with more than 30% in a matter of a few hours. I really don't understand it. Normally there should be mechanisms in place that prohibit a fall that is so steep. So I think, I still think it was a strange thing that it happened on the 20th of December there. Then of course we have a bank with a really great PE ratio. We already know it from discussing all the other stocks from the other countries that I did. The banks are just really well valued, and you should buy for banks. You should really go and buy a bank ETF if you want to invest into the bank sector. An ETF is the way to go. And I think for biotech, when you are into biotech, you should also go for a branch ETF in biotechnology. Don't invest in an individual stock in the biotech, because when you are wrong, you will lose a lot of money. When you are right, of course, yeah, it can go infinite, but you have a lot more opportunity to choose the wrong stock than choosing the right one. And yeah, Lotus Bakeries, the one that makes the speculoos cookies, so the Biscoff cookies, how they are called nowadays, sadly enough, but that's a whole other discussion. Then you have Group Brussels Lambert, it's a holding. Then you have Ageas, it's an insurer. Then you have Elia, the power grid player. Then you have Syensqo, and that's a company that was split off of Solvay. Then you have Sofina, also a holding. Ackermans van Haaren, also a holding. Whereas the POW, it's a retail company that is doing in warehouses, storage locations, and all their warehouses are actually provided with solar panels. So actually, they earn a lot of money with solar energy. Then you have Azelis Group, then you have Solvay, Melexis, Idefika, and then two others with a negative earnings per share. Cofinimo, that's a real estate company, just like Idefika, and Umicore minus 5.45. Where are the days that Umicore was priced around 30-35 euros and had a nice dividend? Now the dividend yield is really up there, but yeah, earnings per share, it's so negative, it's incredible. They they fucked up big time there. Excuse me for my language. And then you have another biotech player, Galapagos, with a positive earnings per share. So Galapagos is doing the things that it needs to do, and they are positive. They aren't paying a dividend yet, but if they continue like they are doing, they will eventually start paying dividends as well. So if we look at the 10 best stocks according to the PE valuation, then we have the best one with the lowest PE is Solvay. It's in the chemical sector, Solvay, and Syensqo is in the chemical material sector as well. And there we have a higher PE value, 9.94. So if you look at the market capitalization as well, so Syensqo, it's split off, and a lot of people were wondering why the CEO of Solvay was becoming the CEO of Syensqo. Well, because it's bigger. That's why. So Solvay was left over with a little bit less good parts of Solvay itself. The good parts actually went into Syensqo. Then you have Ackermans van Haaren with 13.78, Melexis 14.86, Sofina 17.33, and then thereafter you have three other stocks that I'm still listing. So actually I should only have listed the first seven because they are below 18. But AB InBev, when it's around 18, 19, that's definitely a contender. Elia as well. It's a well-managed company. And then D'Ieteren Group, that's a more dubious player, I think. I find myself, but it's also a really established group. It already exists for a long, long time, and they pay out consistent good dividend, and they also manage their payout ratio really well. When we look at the dividend yield, there you can see that high dividend yields can come with a lot of trouble. So Cofinimo, negative earnings per share, that was a surprise to me. And yeah, the payout ratio isn't of that much important then, but look, the dividend, is it maintainable like this? I don't think so, but yeah. Cofinimo, it's a great company. They have great office spaces. So we have to see what is coming next. And the interest rate is going to come down in Europe as well. So in America, it's about to happen. In the USA, it's about to happen. And Europe will follow shortly after in September. Then we have Umicore, the fallen star, with a negative earnings per share of 5.45. So there I think the dividend will drop for sure. Then we have Ageas. It's an insurer, PE ratio of 8, dividend yield of 7, and a payout ratio below 60. So I think that one is a really nice share on the Euronext Brussels stock market. Then you have KBC Group, yeah, the bank, Aedifica, Solvay, Melexis, Warehouse de Pauw, Group Brussels Lambert. And there, I must say, look, Aedifica, a payout ratio of 178.440, that's not maintainable. Warehouse de Pauw, yeah, it's trading 12 months, so it's updated. It was a little bit below 100%, but probably next year the dividend is going to come down, except of course when they surprise us in the second semester of 2024. And then you have GBL with the same thing. So in 2023 it was 2.82 and they paid out 2.75, so it was below 100% what they paid out as a dividend. But in the first half of 2024, the earnings per share went down. So now they are on a yearly basis on the 12 trailing 12 months. They are on 2.40. So it's also higher than 100%. And GBL is known for really taking care of their dividends. So probably they will lower the dividends next year. Then we have the 11 best stocks according to the payout ratio, and there you have on top Syensqo, so PE of 9.94, payout ratio of 22.82, and a dividend yield of 2.30, so that's reasonable. But if you look at Solvay with 5.62, if the PE goes down, the price will go down proportionally. The dividend yield will go up proportionally as well. But yeah, for me, if you look at Syensqo compared to Solvay, there needs to come a balance there. So the chemical sector, it's not that wanted, and it always goes between 5 and 10 in the PE ratio, but I think a PE ratio of 7 up to 8 for both firms is more likely. So Syensqo is a bit overrated right now compared to Solvay, but still overall they are really cheaply evaluated. It used to be 15, 16 that Solvay was noting at as a PE ratio. So then we have AB InBev, Azelis Group, Elia, Ageas, KBC Group. Yeah, when you have only 20 stocks, it's normal that the same stocks come back and back again. So Ackermans and Van Haaren, the holding, with a PE of 13.78 and a payout ratio of 25.99. Definitely also a contender as being one of the best stocks on the Belgian stock market. And I also took the 11 best stocks according to the dividend yield and with the payout ratio below 60%. So it's the same list as before, only the order in which they are listed is a bit different. But here Ageas is on top, and that's no big surprise for me because yeah, P value 8, payout ratio below 60, dividend yield of 7. That's just great. Then you have Solvay and Syensqo. So here they are really next to each other, which is more normally for me. And then another one that I really like is Ackermans and Van Haaren. So is Ageas the winner? Well, if you look at the Swiss Re, the best insurer up to now that we discussed, then Ageas is better valued than Swiss Re. The payout ratio is lower as well. So in that regard, Ageas is a really good buy. But as you can see, over the past 5 years, it's actually down minus 7.43%. And yeah, here with COVID, it went down a lot. So on a smaller stock market, the movements are sometimes larger than on bigger stock markets. Then we have Solvay and Syensqo that can be named the winners for the BEL20 Index. And here you see the price evolution of Solvay in the past 5 years. So it was constantly rising, especially here after they announced that they were going to detach Syensqo. It started going up, and then here this peak in transactions, that's the peak on the day before or on the day of the day that Syensqo was detached from Solvay or split off of Solvay. And that's another thing. The chemicals sector, it is struggling. I was planning on discussing the German stock market already, but I didn't have the time. But BASF, Bayer, yeah, they are also now at a PE valuation that is really low. So the chemical sector is just in a bad spot right now. Then you have the holding Ackermans and Van Haaren, and yeah, just look at this. This is another holding that seems really interesting. It has a higher PE ratio than Exor in the Netherlands. And I think the firms that are in Ackermans and Van Haaren, like Deme, it's how do you say it in English? It's a baggerar. They Deme is a firm that yeah, lowers the level of rivers. So they take away the sand so that the ships can go through more easily, and they also yeah, like De Nul. De Nul is also a firm that does the same thing. And yeah, Ackermans and Van Haaren, it's also noting with a bit of a positive compared to the valuation of their parts. So that's a bit less good than with Exor, because Exor was worth 36 billion in fact, but the market capitalization was only 33. In this case, the market capitalization of Ackermans and Van Haaren is a bit higher than the overall value of the holding itself. And with that being said, thank you for watching to this one, and if you like to see more content of this, hit that like button or put a comment in the comments down below. And if you like, you can also hit the subscribe button. It yeah, it lets me know that you really appreciate my channel. And with that being said, thank you for watching, and see you on the next one. Bye.